All right. Good morning, everyone. Louis Porcelino, Friday the 13th, and this is your ES morning call and man over market with Anthony Porcelino. Turn around, Anthony. Hey. I got my Western Illinois shit on. Excuse me, my apparel. And down to Indiana State this weekend. It's a must win for my Leathernecks and Baby Joe. We need to win out to get a bid in the FCS playoffs. So hopefully they can come through with that. All right. I don't know what to tell you. Dismal numbers across the board. The fear of we got China slowdown, retail sales were bad. Everything came out bad this morning. So everybody's disappointing. J.C. Penney, less than they thought. Macy's, retailers across the board. So market is responding accordingly. Yesterday, we finally got that last 1,200 point sell off after the NASDAQ basically was the lagger yesterday. It was the only one that was in a buy mode in the 5-minute pivot, and it finally went to a sell around 215 and or 215, yes. And then after that, we closed on our lows, and we haven't been able to muster any sort of rally. Now, I've discussed this with you before. Is it technical analysis, or is it the charts that become more important than the news? I've always, years ago when I'd be interviewed, they'd say, "Hey, you read the Wall Street Journal, you do this, you do that." I go, "Not really. I mean, that's history, right? When you're trading every day, this is what we're creating. I mean, we're part of what's going on. But now with the democratization." All right, we're back. All right, information. I'm watching Bloomberg behind me on the internet, and they go all night long reporting what's going on in Europe, and the information age has really streamlined trading and changed it. So let's get to the charts. We got a lot to cover today, and let's just talk about reality here. Okay. All right. So what we got over here is you got your SPX. All right. We got a day pivot back down here at 20.3310. All right. I thought that the market, when you look at the way we went up, right, this 1 day jump, and then, and then we kept going up. I like when the market's consolidated, and so do the markets like when they consolidate, right? So the buyers and sellers have to come over here and duke it out until one of them gives up, all right? So we got our day pivot down here in the SPX at 20.3330, basically. And then here our day pivot in the futures is at 20.1250 because we're at a discount, right? So I think that, I don't, look, I think we're going to absorb this news, and we're going to probably rally by the end of the year. We'll get a little Christmas rally. And based on what the Fed does, I think if the market continues down, the Fed will basically back off their stance that they're going to raise rates, right? Everybody's expecting that to happen. But, I think that has been a big issue with them, so they can get off of being sort of like a lame duck Fed and can't get off of zero, right? All right. Okay, so let's go over here, and I'm going to put my cursor. Let me go over here and put it over here, all right? And here you can see in the top left-hand corner, the gray area here. If you want, let me see if I can blow this up a little more. That doesn't change. Okay. All right. So this is in our profile, which we have created this database or data box. You can see that yesterday's TPO count, it was 373. We had 75 on the sell and 290 on the buy, and the point of control did not come down at all. There it is. So this will give you the high, will give you the value area high, and then here the point of control area low, and 20.65 and a quarter. All right. So we're still up there, 20.57. All right. So that means that there was a lot of volume up in that area, but the rest of the day, even though there was more volume, but it was spent moving down, okay? Last night, make a high 2046, okay? Spent most of the morning. So I got this split at M, which is when the London market opened up, right? So this is the beauty of this thing. You're able to split it. And I basically split it at M. And this is the high in the London market was at 2046. All right. And then it went down and it went and made a low down here in at 2033 half. All right. 2033 half. And what do I have down here? And these are the things that we've been talking about. All right. I've got single prints. Okay. That we've talked starting right here. All right. 2031 and a quarter. And let's back up and let's go. Whoops. All right. Let's go back to 1022, October 22, the day that we had the big rally up. Okay. And look at this big buying tail. Okay. You could look at it as a buying tail or you could look at it as poor structure. I look at it as poor structure. Okay. And then down here, we have more. This is sort of where the rally started from, right? So I look at the poor structure and say, okay, here's where we could potentially go. All right. And then when I look at what I already showed you, that's really kind of in line with the day charts, right? So here we are trading below value. All right. We've got the 5-minute pivot right here. Okay. And we got the bottom of value at 2048 half, bull bear zone 2050 quarter, 2056 half, and then 2059 and a quarter. Okay. So, I remember also this is Friday and we've been usually making a big IB range and then spend the day chopping around in that IB range. Okay. So let's just remember that it's Friday and that's the kind of trading action that we've been getting on Fridays. Okay. Big IB range and then the rest of the day spending on either one side or the other of that. Right. And then we also got to see what happens with the sisters. If they're all, the market went down yesterday. We made some lows and then we chopped around most of the day because the NASDAQ was the laggard, right? And that's, people ask me how I use this 5-minute pivot. Well, this is how I use it. And when they're all going the same way, like you saw in the last 45 minutes of the day, it's a pretty good trade to put on after you've had one that's been the laggard all day. All right. So here we've got the 5-minute pivot here at 45.78 half. All right. We got 17,389 in the Dow. All right. And we'll keep you guys updated until we can just get our package out to you. And then 11:52:30. All right. 11:52:30. Okay. So that's what we got going on in S&Ps. Remember that what's the most important thing on either a rally or a break for us is that, if it rallies, it's going to have to take out either the Globex high or low. So I didn't get a chance to throw it on here, but I'll put that, I did it here on my profile chart. Okay. I indicate all the time. I keep those teal lines on there and I throw them on my regular chart also. So I can not lose track of the fact that we're making a new Globex high or low. All right. So make sure that you always do that. Right. And then some of the other things that I do is that, Anthony, what is the average high from opening right now? All right. So you can go and get it in the research.
Let's say 9 points.
So 9 points. So I'll throw this up here like this. I'll put this right there. Okay. And then I'll change the color. All right. I'll go to probably I'll use navy blue or Dodger blue here. How's that? All right. Change the color. All right. Maybe we'll call it Cubs blue. All right. And then I'll wait for the opening print and then I'll count off 9 points and then I'll put this 9 points from the opening. Okay. So this way, during the day, I can look at that as a potential target because over the last 10 to 20 days, it's been the average high from the opening print. These numbers mean things. What's the average low, Anthony?
9.75.
So same thing, right? So then I'll go do the same thing. I'll go get another number here. I'll get a horizontal line. I'll put it down here somewhere. All right. And then I'll change the color. All right. We'll go to Dodger blue. Got to call the Ninja about that. They got to make that Cubs blue. Right. All right. And then I'll wait for the opening print. And then I'll put these bars 9 points from the opening print. And it kind of helps me look, these numbers are, they mean things, right? And when you get things that are all in agreement, like a value area low or single prints at the bottom of a number like that, then those are the kind of things that you want to look at to see if when the market's moving in a direction become, they're average. We're averaging over 20 days, 10 and 20 days. So that means that you have a good chance of getting there. Okay. So those are little tips that you get when you get involved with man over market, right? Okay. I don't have to teach you all these things. I'm smart. I can do things. All right. All right. Here it is. Oil. All right. It's going bye-bye. All right. It's going, we're making new lows. All right. They're storing billions and billions of oil in tankers. All right. It's incredible what's going on with the oversupply. Plus, you have to worry about Iran when they come on the global market. Plus, look, I've said this before. If you're a magician and you got one trick, pull the rabbit out of the hat. And if you're an oil producer and all you do is produce oil, it doesn't matter if the price is at $20 or $120. You have to produce oil. You're going to generate some sort of revenues, and then you have to restructure debt once you don't have enough revenues to meet your debt. Well, what's going to happen? We are going to have some sort of major oil problem. Look, markets, this is supply and demand. Supply and demand. We got too much supply. Demand is less. That's why the market is going down. Economics 101. Then this is going to be like a 2-year cycle where they stop drilling, stop producing, which the Saudi Arabia is pushing this as we speak, right? They're sitting on the biggest reserve in the world, right? The biggest oil reserve in the world. And they can pump oil out at $15. The only thing they have to worry about is paying for their populace because they are really, they have a lot of social benefits for they pay for all the populace, the kings and the Saudis over there and the prince. So supply and demand, but this is not going to just turn itself around in a week, right? You're going to get some gyrations. It's going to take 2 years for the market to stabilize until people stop producing. There's going to be some pain. We need pain. If you don't have pain, you can't get to an extreme low. There's got to be more pain. All right. Here we are currently. All right. So we are point of control 41.78. I've got a bull bear zone, which we just bounced off at 41.48. Okay. It's right here. We got the value area low of 41.66. Value area high of 42.24. I've got that out on Twitter, and we'll kind of update it for you today. All right. Here it is for gold. All right. We went to a sell when we got through here, which was 11.13.5. Look at this gold market. We have one up now. Now, we're getting a little bounce up today because of these numbers, right? And I don't know what I have no idea what's going to happen if the Fed comes out and says, that's it, we don't like the data and we're really not gonna raise rates. There should be a huge bounce in gold and bonds. All right. So gold spiked up here on the retail sales numbers, right? and now it's right back down inside value again. So we got value area high at 1084.30, bull bear zone 1080.30.60, VPOC at 1079.70, value area low at 1078.40. All right, so you guys know what I think about this. This is going to be driven by the Fed, and if they raise rates, see gold at $1,000. All right, $1,000 and maybe possibly 950. All right, that's incredible. You guys know that I started trading gold in 1981. Right, that's the first pit that I walked into. That's why I cut my teeth in this business, and gold was at $850 an ounce, and it broke from there from 850 down to 375 or something like that. Not that year, but over the next several years, and then I transitioned into the ES or the S&P 500 bit. So, I have a very, I was taught gold by a guy named Maury Kravitz, who was probably one of the brightest minds I've ever met in my life, and my dear friend. And he taught me a lot about gold. Look, gold is a demand product. All right. It has nothing to do with supply. We support. All right. You can only use so much gold for jewelry, and you can only use so much gold for electronics. All right. And there's other, so the supply is never going to be impaired by the fact that people, we're never going to get an oversupply or a shortage of gold because of jewelry and electronics. You're going to get the price is driven by demand. That's it. And why you want it? Hedge against inflation. Well, we have no inflation. All right. And strong dollar. Well, we do have a strong dollar. So if we raise rates, now there's carrying costs. If you hold gold, you got to pay to store it and you hold it. Right. But if we get interest rates back, you can get out of your gold and get something that generates an interest rate. So I think that's what's driving gold. And with the idea that the Fed will raise rates, then people will move out of gold and into something that creates some interest. Okay. So that's it. Demand. Don't let everybody tell you that gold has anything to do with supply, because it does not. Okay. And I'll argue with all the greatest minds in the world about that one. All right. Here's bonds. Here we are. So we took out our day pivot based on what was going on in the Fed. I can't really trade bonds. I mean, the bonds to me are, so manipulated by the Fed that it's really hard, right? And that's what's making trading hard across the board, right? When I started trading, the Fed and global markets were not as tight as they are now. It wasn't a global marketplace. I think in 1987 is the first time they realized there was a global marketplace in the crash of '87. But as a matter of fact, the markets were very fragmented. Now they're very connected. But the fact is that governments and the Fed used to react to crisis, and now we have a government and a Fed trying to prevent crisis, and that's why trading has become more difficult, because the markets have taken a different tone. I mean, they just don't react to market conditions the same anymore. We manage our expectation based on whether the Fed is going to raise rates or not, right? So last week when we got to the great jobs report, we didn't rally, right? We didn't rally. So I don't know. You just got to be able to manage that. So we are in, as far as our day pivot, it's in a sell. Okay. And when we look at the ZB today, it spiked up a little. We're trading above value. And I just think that, if they're data dependent, we got the bull bear zone right here at 152.28, 152.23, top of value, VPOC 152.01, and then the bottom of value 152.03. Okay. So I think we had a little spike up, people that are short bonds. If the numbers get that dismal, can they really, really go back to the fact they want to raise rates? All right. So, because they've been telling us the whole time, they're data dependent. They're data dependent. Okay. News out of China this morning is not very good. Retail sales wasn't very good. PPI wasn't very good. Let me stop sharing here. All right. All right. So, Friday, big IB ranges, and then usually we stay inside the range. We need to, that's what's been going on in the last 2 months. So I don't expect that to change today, uh, barring some unforeseen sort of news crossing the wire. Back in the day when interest rates were, I told you I traded gold when it was at 850. Interest rates were at 19%. I bought my first house. I had to get mortgage insurance, and the rates I was paying was like 17% on a house. And Billy Carter, Jimmy Carter was president, and Billy Carter said something. Who was his knucklehead brother? Interest rates would jump up and down 2 basis points, like in a day. So anyway, and that was as a result of runaway inflation. Okay, all right, and Volcker was the Fed chairman then, and then they had it was runaway inflation and the savings and loan crisis. So then there was regulation that came with that. So anyway, and then I remember in the crash of '87, I think I've told you the story before. I was sitting there when Alan Greenspan called the president of the CME and said, we're going to free up interest rates, and so the rates were around, I think, between 8 and maybe 7.5 to 9%, and rates would fluctuate. And the Fed would come out sometimes in the middle of the day and make an interest rate move. All right. So, we're on zero. That's it. We're at zero. We can't go anywhere any lower. And I can't see the United States ever moving to negative interest rates. So I really wish that they would raise the rates, get it out. All right. And I think everyone keeps telling the Fed should be one and done. They shouldn't. They should raise the rates and then do 2 or 3 more and get to 1%. Right. So you get to 1%. I know it's, 1% on trillions of dollars is a lot of money, but at the end of the day, they'll have something in their war chest to pretend like they can help interest rates. Right. I just think that interest rates now, because the kind of society we are, doesn't really help us. It doesn't matter if we're on zero, right? The housing market is dismal still. The issue is that the banks are not lending. And Dodd-Frank and all those things for the regular guy is killing us. It's killing the average Joe. All right. And what are they doing? They're trying to protect us from the knuckleheads who created 2008. So at the end of the day, we all suffer and they get richer. All right, guys, have a good weekend. Cheer for the Leathernecks, and we'll see you on Monday.